So, Jim Simmons is a world famous mathematician and billionaire investor, very well known in the stock market world, with a net worth of over $30 billion, which, by the way, is about double the size of Ray Dalio. It's pretty crazy. And he's also the founder and portfolio manager of Renaissance Technologies, which uses quantitative models based on math and statistics to determine what the best investments are. It's pretty interesting stuff. And it's also led to a ton of success for them as they've now grown to over $100 billion of assets under management. Well, in today's video, we're going to be running through the 5 largest, most recent stock purchases that they made in this last reported quarter. 2 of which, by the way, were brand new additions to the portfolio, and the other 3 stocks were giant increases of either hundreds or even thousands of percent. So it's going to be really fun to go through these, and this is actually a video that a lot of you have been requesting for some time, so I'm happy to finally make this for you. But let's not waste any time, guys. We got some interesting stocks to run through here, some interesting pickups, so let's just go ahead and jump straight into this list. Alright, so we'll be counting down here from smallest to largest position in the portfolio, and coming in at purchase number 5 is actually one of my personal favorite stocks to be buying this past year in the internet technology giant Google, ticker symbol GOOGL, which Simmons added to the portfolio last quarter after previously selling out of it the quarter before that. Now, it's only worth less than 0.5% of the total portfolio. However, that's still over $300 million, so it was a really big purchase overall. And yeah, this one I really like. I mean, in fact, I just released one of my new short format videos last week where I covered why I think Google is still a buy today despite having recently skyrocketed this year back to near an all-time high. And actually the stock dipped a little since making that video, so now their valuation is even better at more than 11% cheaper than the sector on a PEG ratio basis. And I'll just tell you right now, guys, anytime that this stock is cheaper than the sector, even on a PEG, I think it's a screaming long-term buy. So I'm picking up more shares myself. Now, I'm not going to run through all the reasons why, because I've already talked about that in so many of my recent videos that I don't want to bore you guys with the same information again. Although you are, of course, more than welcome to watch any of those recent videos if you need a refresher. Even my short one gives a really quick summary of that. I think it does a good job. But as far as ranking it goes, Google easily gets the #1 spot for now, and I highly doubt that we'll see anything else on this list that deserves to be ranked higher. Google is just such a great stock for literally anyone's portfolio. But moving on here to stock number 4, we have another brand new addition for Simmons last quarter, and what's interesting is that it's the company of another famous rich investor in Warren Buffett's Berkshire Hathaway, ticker symbol BRK, which Simmons added over $300 million of. Now, if any of you are a longtime viewer of my channel, then you know that I've always had sort of mixed feelings on Berkshire. On one hand, it is a very safe and reliable long-term investment, which comes from its already massive size. I mean, they did have a rare dip last year because of write-offs, but typically they do hundreds of billions in sales and close to 100 billion of profit too, which is very similar to something like Apple. I mean, it's absolutely gigantic, the numbers that they do. However, if you're looking for a lot of growth, then you'll probably get a little bored with this stock. I mean, first of all, one of the biggest things that I personally hate about this one is that it gets very little coverage from analysts. I have no idea why. I mean, you would think that with a giant company like this, it would get much more coverage, but there's only 2 analysts on Yahoo Finance who seem to think EPS will shrink by an average of 15% per year over the next 5 years. Now, granted, they could be way off, and they probably are, but the stock itself is only up around 60% in the past 5 years, despite trading at an all-time high. And at these levels, the valuation is also pretty rich. I mean, you're talking about a forward P of almost 20 and a PEG of almost 10. Again, that could be wrong based on projections, but even Seeking Alpha has their adjusted PE ratio listed at over 20 as well, which is like 1 to 200% higher or more expensive than the sector. And that's just too expensive for a hedge fund that really primarily invests in boring types of companies like big banks, oil and gas giants, and large insurance companies. The biggest holding is Apple, which I do like, but it's probably my least favorite of the big mega tech companies anyway. For example, I think Google, Amazon, and Microsoft are all much more attractive. And even then, Apple is really the only interesting tech stock that Berkshire seems to own, or at least it's the only one that they have a really big position in. Again, I think Berkshire is a solid stock to own, especially for rich investors that want stability over something like growth potential. But I think for the rest of us, waiting for one of their bigger dips before buying in makes more sense, which by the way does happen pretty often because they're just so exposed to the economy and the market that, they do tend to dip on occasion. So I'll put it somewhere in the middle for now at number 3. I think it's a pretty reasonable ranking for this type of stock, and we'll see what else is on this list. Okay, well, the next stock is actually one of my favorites that I own myself too, and that is the artificial intelligence semiconductor specialist NVIDIA, ticker symbol NVDA, which Simmons held a very small position in up until last quarter, where he decided to all of a sudden increase it by nearly 60,000%, bringing the total stake in the company up to nearly $800 million. And yeah, what's not to like about this one? I mean, you could definitely make the case that it's too expensive right now after having shot up to the moon this year by over 180%. However, even here, I still love Nvidia stock long term. I mean, their growth in AI is propelling them to levels that I don't think we've ever really seen before. In fact, JP Morgan estimates that Nvidia will make more money from AI spending than any other company this year. How crazy is that? And it's why sales exploded in recent years, nearly tripling in size since 2020. And even after all that growth, revenue still doubled last quarter, while net income grew by over 800% as well. And for the full year, sales are expected to nearly double again this year and still grow by another close to 50% next year as well. And the reason is simple, guys. I mean, Nvidia is just the best out there at what they do. And the markets that they're competing in are all expected to be worth trillions in the future. I mean, look at some of these projections. Smart cities over 6 trillion, autonomous driving 2 trillion, metaverse 3 trillion, data center half a trillion, gaming half a trillion, AI 2 trillion, with some projections way higher than that depending on how you classify it. I mean, just generative AI alone is expected to be 1.3 trillion. So it's really incredible the amount of potential that they have, and it's why Nvidia estimates their own addressable market at over $1 trillion as well, which is 37 times larger than what they did in sales all of last year. I totally understand waiting for a bigger dip since the stock has risen by so much recently, and there's certainly other chip stocks available that are much cheaper too if you're looking for more value in this specific space. But longer term, I just think Nvidia has still really a lot of gas left in the tank, and it's why their more forward-looking PEG ratio is actually 30% cheaper than the sector, if you can believe it. So I'm definitely holding my position long term, not necessarily buying more at this time, but I do love it overall, and I'm easily ranking it number 2 on this list, and I'd probably even buy some if I didn't already own it. So I still agree with Simmons' decision here to be picking it up. That will, however, leave us now with the final 2 stocks of the list, and coming in at the second largest position, it's going to be yet another stock here that I own myself too, in the smartphone giant Apple, ticker symbol AAPL, which Simmons seems to have a pretty volatile relationship with. I mean, often buying and selling in various quarters, with the previous quarter almost selling completely out of it. However, this most recent one, he decided to buy right back in with an increase of over 50,000%, up to nearly $1 billion of a position here. And I'll just make this one really short and simple because I've expressed my feelings on Apple many times in the past already, but overall, I think they're a very safe and reliable stock to own long term, with one of the stickiest businesses out there within their ecosystem of products and services that helps them generate absolutely mind-blowing financials of nearly $400 billion in sales and $100 billion of pure net income profit, which is almost unheard of out there. But as much as I think everyone should have at least a small piece of Apple in their portfolio, I still think there's other giant tech stocks that are trading at, I would say, more attractive prices today. Apple, for example, has already risen back to an all-time high, and if you're familiar with the stock and their business, then you know that they can actually be quite cyclical at times because of the ups and downs of smartphone sales. For example, I do think that they'll see a major upswing whenever they decide to release foldable and flippable iPhones, which I think everyone will go crazy for, and they'll likely sell like hotcakes, creating a bunch more growth for Apple and sending the stock higher. But at present time, there's just not a lot of buzz or excitement out there, and that's why sales are actually falling by close to 10% this year and then only rebounding slightly by 6% the year after. Now, that's a hard pill to swallow if you're buying the stock at today's really high price that leaves it trading significantly more expensive than the sector on virtually any metric you look at, while also being the most valued company in the entire world by market cap at close to $3 trillion. Again, long term, I think it's a great stock to hold, but I'd rather wait for a significant dip before buying any more of this stock. And as far as ranking it goes, I'm much more excited about Google and even a little more about Nvidia. So I'll give Apple the number 3 spot and I'll push Berkshire down to number 4 so I can fit it in. Alright guys, that's going to leave us now with the final stock of the list. And coming in here at stock number 1, the largest of the 5, it's going to be yet another gigantic tech stock that I also own myself. And this time it's Meta, ticker symbol META, which Simons more than doubled his position on last quarter, bringing the stake up to $1.3 billion. And yeah, like I said, this is another giant stock here. In fact, every single company that Simons purchased are all ranked in the top 10 largest of the world by market cap. How crazy is that? I mean, Apple is number 1, Google is number 4, Nvidia is number 6, Berkshire is number 7, and now Meta is number 9. And I gotta say, I like all of these really, including Meta. I mean, I showed you earlier how the metaverse and the AI markets are expected to be worth trillions of dollars. Well, Meta is just as big of a player here as anyone else. I mean, they've easily spent more money on the metaverse than any other company I can think of, which they also hold the most market share in both social media platforms as well as virtual reality headsets, with also around half the world's entire population using at least one of their products. And when it comes to AI, well, they've been investing for years on all kinds of algorithms and AI related technologies for their various platforms. They even built one of the largest supercomputers in the world through a partnership with Nvidia. And financially, they're just as strong as ever. I mean, I know that some people like to paint the picture that Meta is dying because of how much money they burn on the metaverse. But what they conveniently leave out is the fact that Meta has more than enough money that I think they'll ever need to just be burning it away, or in this case, I would say investing rather than burning. But they do over 120 billion in sales and over 55 billion in operating cash flow just in the past year alone, which, by the way, they're still growing sales by over 6% this year and then expected to accelerate to double digits the year after as well. I mean, that's pretty crazy for how big they already are. Now, the stock has already recovered from the recent crash where I was buying more heavily, but even after climbing almost 150% this year, it actually still has a pretty cheap PEG ratio of only 1, which is 34% lower than the sector. So it's going to be a little hard to rank it here just because there's so many great options, but I think I'll give them a slight edge over Apple for the cheaper valuation. I know many would disagree with that, but I just think at today's price, Apple is a bit too expensive. But there you have it, guys. My final ranking is as follows. I put Google at number 1 as the clear all-around just best stock to invest in, which I think is an easy buy at today's prices. Then I put Nvidia at number 2, who I admit is expensive right now, but I still really love them long term. Then I put Meta at number 3. It's a good balance of some value with future potential. Then I put Apple at number 4 as a great long-term stock who would normally be better than Meta, I would say, but right now it's just too expensive for me. I think a dip is necessary in this one. And then I put Berkshire at number 5, which is a solid choice too, but when you're on such a heavy hitter list like this, I'm sorry, you're gonna end up in last place. There's just too many other great stocks on here. And so in conclusion, I really like these pickups here by Simmons. I mean, I can't argue against any of these. Obviously, some are a little expensive and waiting for some dips is reasonable. But at the same time, if I'm looking at these as long-term investments, I think they're all pretty solid choices. I think they're all going to outperform over the long term. So even having them at today's prices is, I think it's fine. And I would just probably buy heavier if there are any dips or volatility in the future. But anyway, what do you all think? Do you agree with me? Do you like any of these stocks? Do you own any of them yourselves? I'd love to hear your thoughts. Again, I own 4 of them, just not Berkshire Hathaway. It's the only one that I don't own myself. But I'd love to know also if you agree with my ranking. So let me know down there if you'd make any changes. But thanks again for stopping by. I hope you enjoyed the video. Thank you for all your support. It means the world to me. And I will catch you in the next video, my friends. Take care, everybody. Bye-bye.